Good morning, traders. It is 8:02 a.m. Chicago time. Thanks for joining. It is Quad Witching Friday, the 20th of March, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A quick look at the overnight news gives us pretty much nothing. Not much going on. Greece's government expresses optimism at current EU leader summit. However, Germany continues to dampen hopes of a quick deal and wants Greece to speed up its efforts to make progress on the February 20th agreement bailout extension. So the friction between Germany and Greece continues, and that's really it. Looking at what's on deck for today, of course, the March contracts expire this morning at 8:30 for futures, and we still have hedging and delta hedging and so on going on probably throughout the session today. Again, it is Quad Witching Friday, not the most fun day to trade if you're an outright day trader. So it's a great day for you to keep your emotions in check and just take the opportunities that show up. Do not be surprised if today we see lockups in prices. In other words, don't be surprised if we find that price looks that the market looks like it's shaping up perfectly for a pattern or whatever, but it doesn't go anywhere. Looking ahead today, at 9:20 Central, we have Fed's Lockhart speaking on monetary policy in Athens, Georgia. At 10:30 Central, we have Fed's Evans speaking on monetary policy in Washington. It's the Fed parade. At noon, we have the weekly Baker Hughes rig count. I doubt that this will have as much of an effect. And then the only thing that's left is that the ECB's Draghi is participating in the EU Council meeting. We don't know if he's going to release any comments or statements. Let's switch over to our charts. And looking at what we did yesterday, we always want to look back in time and see what we've done versus what was expected. Yesterday's primary hypothesis, for anyone who was here for that, the primary hypothesis was looking for responsive buying on the open. We got some selling right on the open, but we did get some responsive buying on the open up into the HVN. And then the main idea or the main hypo for the day is for it to start tracking down with 2077 being the key figure. The key over underline, I explained yesterday why it was the key over underline. And for me personally, for my own selfish reasons, I was looking for a break of the 2080 and for it to fall down the flagpole, better seen here on a market profile chart. I was looking for the break of this 2082 and for it to just slide down the flagpole. Would have been nice for it to get back down to 6250. No such luck though. The 2077 has shut off buying yesterday by 2 ticks and has held the market at bay. Completely balanced profile. Just with the point of control at 2081. It's stuck in this HVN zone here, and I'll show you a different view of this and explain again, as I've gotten several questions, why 2077 was important. So let's look at that. Let's look at the 2077. So I did not include yesterday's bar in the composite here. If we look at how this market is traded, you can see this clear HVN right here, a low volume node, and it's formed since the high was put in. This is an area that was rejected in price and has a low has had a low participation rate, just like yesterday. Yesterday adds to this LVN zone. The more clear view of this is the monthly profile. If we look at the month-to-month profiles here, you could see a pretty solid trend on the long term. Lots of balance between October, November, all the way through to February. Then we have that gap up on February 13th, and then we've taken some of that back in March. But if we look at this profile here, you can see there's a divot that was put in the 2077 area. It was filled in. The green was yesterday. These green dots or green letters were yesterday's bracket. And we filled in some of it, but you can see here there was a string of LVNs here between 2077 and 2075.50, and that's what I was referring to with 2077 being the volume profile limit on those prices, and that's where that level comes from. With that being said, essentially what we're doing is, since we've broken through on Fed Day to the upper HVN, what I had said yesterday is, because we're above the 2077 over underline, then we're looking for 2103. 2103 is the next key price to test. 2101.50, 2103 being the target. The market in auction theory, in the way that I look at the market generally goes from unfair prices to value, to back into value, back into the most fair price or the most traded price, back to unfair prices for a test, back to the most fair price, back and forth, back and forth. So having gone through the composite LVN here, 2077, the targets become very clear, and they're the high volume nodes up here at 2101.50, 2103. So my target upwards yesterday for Hypo 2, the big target was 2103 here, carried over from the high, the most recent high. Currently, the market's trading at 2096, with 2096.50 being the overnight high. It's been rallying pretty steady with the European session. After the market closed on the U.S. session, it reopened, tested lower, went down to 77.75, and has been going sideways with an upward skew until we opened in the European session, and then since then it's been pretty strong. We see some significant strength coming from Europe. Right now, the Euro stocks are up 1% from yesterday's close. The DAX is up 1.15%. Some really strong movement there. A quick look at the Euro stocks. Remember, these have expired. We're now trading June in the Euro stocks, so make sure to reload your data if it doesn't do so automatically. Of course, if you're with IQ Feed, your continuous contract will be equalized, and all you have to do is a full download for today. So this has traded perfectly in balance so far and continues to be in balance. The Euro stocks are testing the most recent high at 41, and it looks like we'll have continuation today. They've rejected the lower prices. We have tested the point of control below, and the Euro stocks have also tested the 35.70 area that I talked about yesterday, the high volume node that was down here, tested almost perfectly. Again, yesterday the sellers were cut off at 76.50. This looks very bullish. This looks like a continuation pattern. I'm looking, as Hypo 1 goes, I'm looking at 99.75 to be taken out today. I expect the FOMC high to be taken out. I expect a test of 2103 today, hopefully with quad witching and all the hedging that goes on with futures. On a day like today, we don't end up with the price lockup that we often see on quad witching Friday. So that's the primary hypo. Secondary hypo. So look for an open auction out of range today. Look for an attempt lower, and then look for a solid break higher. That's what I'm looking for. Again, we just pushed a high again on the S&P, and I believe we're going to continue that trend higher. Yesterday was a pullback day. We're looking for continuation on this impulsive move as the market completes a natural pattern of exploration higher. The secondary hypothesis, open auction out of range, tests higher, take out the overnight high, fail to find more buyers, and then rotate back down into the prior day's range with targets at the 2090 quarter FOMC announcement high. If it gets back into the range, we have a balanced profile, so we're looking for 84.50 and then 81 even. That's hypo 2. Hypo 1, open auction out of range, test lower, push higher, and hold steady with an upward skew. Two-way trade with an upward skew into 2103 today. I wouldn't expect too much range today either. So that's where we are. We looked at the Euro stocks. We looked at what we expected yesterday versus what we got. We looked at what we got overnight, and then we're putting out our probabilistic view on what we expect the market to do going forward. The only job left to do as a trader right now is to see what participation or what action we're going to get on the open, and then find a spot to lean against to go in that direction. It's simple. It's not easy. I want to just segue for a minute. I have about a minute and a half or so. I want to segue for a minute and just talk about the difference between risk and uncertainty. I was watching a webinar. Somebody had linked a webinar to some trading education guru who was talking about uncertainty and risk interchangeably. And I want to tell you that I disagree with this view. Risk is different than uncertainty. Uncertainty exists in all aspects of life, and it certainly exists in the market. And that's why we did, like the webinar we did yesterday with IRT, we're looking at probabilities to manage some of that uncertainty, to manage how we trade that uncertainty. Uncertainty is always going to be there. There is the outcome of every trade, as I always say, is uncertain. We don't know what the next trade's outcome is going to be. Even if we have a 99% winning system, we don't know where that 1% trade is going to end up. So there's always uncertainty. The difference between risk and uncertainty is that risk can be defined. Risk is the amount we are putting on the line to take advantage of that uncertainty. And so if we want to take advantage of a probability, we have to define that risk, and that's the amount we're willing to pay to see what the outcome is for that particular uncertainty. Trading without any risk parameters, trading without a risk plan, is just uncertainty compounded, and it's compounded by emotion. And that's something I try to pound into the traders at Stage 5's heads all the time with the weekly webinars and so on, is that we cannot sit here and say, I feel that the market will rise. I feel that the market's likely to rotate down. I feel. It does not matter what you feel. What matters is what you can logically explain, and better yet, probabilistically explain. And then you take the edge. You know the uncertainty is always going to be there. You define the risk, you take the trade, and then you do it again and again and again. And if you have an edge over time, then you have a return on your effort and investment. So to trade professionally, this is one of the key elements you need to understand. I'm way over my time. 15 minutes are up. I wish you the best of luck. It's Friday. Remember, Fridays are the worst days to blow up. They ruin your weekend. You're not going to be much fun to be around with friends and family. Friday's not the day to risk 20, 30, 40, 50% of your account on a trade that you're too stubborn to get out of. Define your risk, take it, and if it works, it works. If it doesn't, get out.